Kagiso Securities employs a discounted cash flow model with a combination of a technical and fundamental analysis to construct its research portfolios. Abdul from Kagiso joins us in studio to chat about the Kagiso Equity Alpha Fund and to share their views on the Lonmin saga. And Abdul, you know that I'm going to go straight into Lonmin and your thoughts, how you are faring as a shareholder and obviously what your views are.
Yeah. Thank you very much for the opportunity. I think first of all we want to say that our sincere condolences goes out to the miners that have been killed, their families, and obviously all involved in the unfortunate tragedy that has happened last week. I mean, we were sitting and watching on TV, and it was obviously absolutely horrifying to see what has happened. And I think clearly from that point of view, to then focus on the company and its operations is actually less of an issue rather than focusing on the lives that have been lost, etc. And I think that has been a clear focus in terms of our discussions with management and with the company of late in the last couple of days. But secondly, I think also important is the fact that the CEO, Ian Farmer, has also been taken ill. He apparently has quite a severe illness, and our thoughts with him and his family as well. And it's clearly quite trying and difficult times for the company. And clearly all of that has been reflected in the share price that has really taken a beating over the last couple of days and weeks as well.
Abdul, I mean, a question from my side, notwithstanding the recent turmoil we've seen specifically with regards to Lonmin, just looking through to the labour unrest, which has been a recurrent theme for quite some time, and that Lonmin share price, which prior to the news and the unrest on their specific mine has been languishing for quite some time. Just your thoughts in terms of rationale behind having it in the portfolio and you know the kind of levels that you would have bought this into the portfolio at in any event.
Yes, I think that's a very good point, and precisely because of the share price languishing, as you put it, it started to appear on our radar screens. If you look at our investment philosophy and process, the companies like Lonmin, where they've had a significant de-rating relative to other platinum miners, and we, on the face of it, the balance sheet in terms of the fixed assets looked fairly healthy. They've recently spent substantial capital expenditure over the last couple of years, so the capex and the infrastructure is fairly new in terms of the Lonmin operations. It clearly came on our radar screens about a year ago. We started to do work on it. We started our first exposure to Lonmin happened about a year ago, around about the mid 120, 130 Rand level. And obviously, as we did more work, we've strengthened our research on the company, and we gained greater conviction in our call that Lonmin is significantly undervalued. We've obviously increased our equity exposure to the company over the recent months, and especially of late with the recent weakness, sharp weakness that we've seen in the share price as well.
So you at the moment are accumulating, is that correct, Abdul?
Yes, we have been buying over the last couple of days and weeks as well, yes.
In terms of the platinum cycle as a whole, when do you expect the kicker to come? Is it going to emanate from macroeconomic news flow globally, or is it going to be pure economics, supply versus demand, and aggressive supply constraints coming to the fore?
Yes. Very good point, and obviously we've seen the platinum price languishing over the last couple of months. I think what has played quite heavily and weighed quite heavily on sentiment is the fact that we've seen significant supply coming from recycling. So casting your mind back to say 2 years ago when we saw in Europe and in the US cash for clunkers, for example, where a lot of the older vehicles were scrapped. Obviously that was a source of recycling because those autocats in those vehicles were recycled, and instead of buying new platinum from the platinum producers, many of the auto manufacturers obviously had a ready source of platinum for new vehicles as well. And as a result, Johnson Matthey, who are the authorities in terms of supply and demand sort of fundamentals, they estimate that last year there was something like a 200,000 ounce surplus in the market because of the recycling phenomenon. Now what we have seen is that clearly over the last couple of months, going back even further than that, we've seen Section 54 stoppages in the industry. We've seen numerous sort of supply disruptions, and of late, obviously with the focus on cost and the depressed price, we've seen the likes of Amplats, Impala, and Lonmin saying that they will curtail production and obviously cut capex as well. So clearly, if one looks at the fundamentals of platinum versus, say, other commodities like gold, for example, it's a much more concentrated market. We, South Africa and Zimbabwe supply more than 80% of the world's supply of platinum. And even with the recycling phenomenon, Because of the concentrated nature of supply, you only need a reduction in supply coming from Southern Africa to meaningfully and significantly affect the overall supply balance, and as a result put the market back into deficit as well.
Abdul, I mean, something for me that, I mean, we saw this when we had the energy cuts a couple of years ago, is that South Africa, whilst we might make up 80%, give or take, of world platinum production, almost inevitably fails to capitalize on higher resource prices when you look through to the underlying equity or the stocks that operate in this particular space. Now, we've seen this with, for example, the platinum price, the recent strength we've seen purely on supply constraint fears, but you're not necessarily going to see the same uptick in the underlying equities. You as an equity manager would be looking to those underlying equities for your return, whilst other investors out there would have the option to go long the underlying metal via an ETN or some other direct form of getting exposure to the metal. Your response to that?
Yes, very good point. And again, if one looks at ETFs and ETNs in particular, bearing in mind that in the overall, because that is clearly a source of demand for platinum, because clearly that would go to the investment bankers, they would demand the platinum, and they would create the vehicles like ETFs and ETNs. In terms of that market is tiny at the moment. So in terms of, if one looks at the relative sizes, the ETF market is still small, and even compared to the gold ETF market, it's also fairly small as well. So that's the first one. The second point is that while you are correct in saying that certainly what we have seen of late is metal prices recovering over the last couple of days, and there be a lag effect, we ultimately believe that platinum miners are superior to gold miners in the sense that clearly it's just based on the fundamentals. There is a direct operational and almost a leverage effect that comes through in terms of their margins, in terms of profitability, and the track record speaks for themselves. I mean, they have paid out reasonable dividends in the past when platinum prices were reasonably high, as opposed to gold companies, for example. So we would argue that with high platinum prices, we will see that gearing impact coming through in terms of increased profitability and ultimately increased dividends to shareholders as well.
Recent concerns around the potential for the unrest to be spreading to other platinum miners, for example, reports of Royal Bafokeng workers making similar demands, and the impact that has on the platinum industry in South Africa over a longer term, in terms of the investment that's going to go into the ground and in terms of the investment case for a long-term investor. Your views on that and stability of that market with a rising cost base and compression of margins for the miners, should the recent spike in price action not prove sustainable? We're still below a technical, I think it's a 2011 downtrend on platinum, which I'd be watching for a potential breakout of. But your views in that context?
Yes. Again, one has to contrast, and that is why it's so important to look at the nature of supply and the concentrated nature of that supply as well. You are quite correct in saying that clearly there's upward pressure on wages. We have seen that for the last couple of years. And I think there's quite a bit of misinformation in the market as well in terms of what platinum miners and rock drill operators actually earn, because there's obviously the gross salaries and then there's net salaries as well. So, but clearly in terms of wages, there is actually an existing wage agreement in place at Lonmin, and I think for this year they're due to get a 8.5% wage increase. But besides that, I think what we have seen is that with the nature of the cost basket, labor is typically about 40% of your costs. So even if that had to grow at 10-15%, you're looking at about 7 or 8% contribution to overall cost growth. In the context of platinum demand still growing at about 2 to 3% per year, and in the context of further supply disruptions, we would argue that any cost inflation that we're seeing should translate into higher platinum prices longer term as well.
Abdul, thanks so much for your time. That's Abdul Davids from Kagiso Securities.